and government support we've been seeing, we've never seen this level of collaboration and support in our industry before. Now, headwinds. What do we need to keep addressing? It's the same thing. Every conference, you'll hear the same thing about our challenges in recruiting, our challenges of retaining our workforce. There's cost inflation, but there's a new flavor. Over the last 12 months, we've seen the movements in currency of the Philippine peso versus the US dollar and the Indian rupee versus the US dollar. Now it's about 30% differential between the two. We used to be about the same against the US dollar. So from what started as a higher, slightly cost rate of doing business in the Philippines, that cost differential has just become much bigger. There's some talk that's going on. We haven't seen the market actually being impacted by that currency flux, but it's something that we gotta figure out if the impact is gonna come and how we're gonna manage through that impact. Cost inflation, we hear in the salary surveys that inflation keeps going up at a high rate for our industry, 8 to 9%. There's a question of how much can we sustain all of that before we actually price ourselves out of the market. Incentives and the policies that regulate our industry, we tremendously welcome the new bills that were passed on data privacy and the anti-cybercrime. There's a Department of ICT bill, which if we had a discussion, we would need an entire conference on that separately. But every time there's an attempt to actually look at, do we need to change some of our incentives or some of our policies? And our constant message to our colleagues in Congress is that we gotta maintain a predictable, consistent regulatory to make sure we continue to attract investors to the country. So please don't change it. The formula is working, and we don't want the formula to be changed because it does work. Lastly, I think this is something that's gonna come up more and more in the discussion topics of different boards and different key clients around country risks. And why is that? Because we've just become every year a bigger and bigger share of where they do business activity from, right? We have this tremendous position of being a market leader for contact center work, but having been a primary destination for all of that means that clients are now just becoming more and more worried about putting a lot of business in the Philippines. It doesn't help that you have a lot of the typhoons and a lot of the natural disasters that exist. So although we've had a very sterling record of reliability and resiliency over 10 years we've been doing this, it's gonna come up more and more as a discussion point. We are huge in our presence in the Philippines. What is the country doing to mitigate all of the natural disaster risks? It's one thing that we gotta be ready moving forward. I'll try to give you some data slides that talks about, again, the tailwinds and the headwinds, right? What trends we're capitalizing on and the things we gotta address. Here's a slide, I won't go through all of it. It's a typical slide that we would use when we're in front of prospect investors, locators to the country. And I can tell you that the slide and the storyline hasn't changed much over the last 10 years. And I'll tell you also that the slides really work. When we talk to prospect locators and investors, we show the slides and they go, yep, I agree. That is an incredible story, right? We are attracted to the Philippines because of these. So the main question for us as we now look at 2020 or even 10 years out is, can we sustain these statements? Will the statements hold true another 5 years out, another 10 years out? The second thing we want to address in today's plenary session is some of the criteria on what has made us a top destination might change. And that's why we're very interested in looking out and thinking, what are changes in technology, geopolitics, the nature of work that's going to drive changes in the way outsourcing is going to look and feel and behave like in the next 10 years. So I think we need to keep an eye on the future to be ready for that future. The font sizes are very small, but what we've seen every year is just a continued diversification of types of work being supported by different contact center locators. We tend to do also more and more complex work out of our delivery centers in the Philippines. This is a slide that breaks down headcount in terms of industries that our FTEs are supporting. We tend to see a longer list of industries that we're supporting. We tend to see now an increase in the banking, financial, and insurance sector in the last survey. Here's a slide in terms of language diversification. And again, across these companies we surveyed, between 2 years, 2011 and 2012, 82% said they were supporting US English. And the following year, 2012, that was down to 75%. So it's interesting how language being supported is diversifying amongst these survey respondents. Right? If you look at the markets we're supporting every year, again, we see still the dominance of the US as our market, but every year it continues to shrink, and significant increases in markets like the UK, Australia, New Zealand. All right, let's go to some of the data slides on challenges we need to address. There were multiple responses. If we summarize them in certain buckets, the responses are primarily the following in terms of what are the challenges of our call center companies. Recruiting is number one, the most cited, recruiting-related challenges. Cost is second, retention is third, and as I mentioned a while ago, natural disasters is one of the top mentioned. I think we're fresh from our memory of what happened in August during the August 7th flooding. If you look at the positions that are difficult to hire, it's very intuitive. It's the managers, it's the IT specialists, it's tech support agents that's more difficult to hire from the market. So these are the most often cited difficult to hire positions. And if you look at the hiring rates, the positive story is that we've been reporting around 5 to 7% recruiting rate in the industry. According to these companies that we surveyed, from year to year, the pass rate has gone up from 6.9% to 8.4%. It could tell us many things about what's driving that, but what our goal is to actually continue to expand the number of people who are qualifying from the applicant pool. So this is a positive trend. If you look at what the companies are doing, there is more and more companies that are capitalizing on next wave locations. So non-NCR location expansion. And here's a slide in terms of trying to summarize. I know there's a lot of data points here. Just essentially where we are in terms of magnitude, momentum of addressing our talent challenge, right? As revealed by the earlier slide, talent is still the biggest challenge. And if you think about what have we done that is actually scaling and fundamentally going to change the talent part of the equation. And we're incredibly excited because across our associations, we have a view of multiple projects that are actually this year, if we actually go live with all of them, going to touch over 100,000 scholars and students. Over 100,000. Across these and across the funding agencies that are supporting us, it's about 666 million pesos worth of funding, or 668. The biggest portion of that, as you know, is the TESDA Near Hire Scholarship, but there's also funding from CHED, there's funding from the local government units, there's funding from ADB, there's funding from a private foundation. So we're very excited about the upswelling of wanting to support us. And if what Senator Angara said was true, which is $1 billion maybe for next year from 668, then we have a huge amount of work in front of us to actually be responsibly moving the fund to actually change the talent part of the equation in our industry. So we're incredibly excited that we have a line of sight now on how we can actually attempt to solve the talent part of the equation at a scale level, touching hundreds and thousands of people who can help augment the talent supply to our industry. Attrition rates, roughly the same. We reported about 3 years ago, based on a survey we did with Pricewaterhouse, that we were 60% or 59% annualized attrition. If you look at the monthly attritions we are getting for this year and last year, it's going to sit around 65, 66%, right? So a little bit higher than the last number that we did research on, but still around the same range, now over 60% annualized. All right, finally, and I'll leave you with the last couple of points, which is I mentioned on incentives and policy consistency. And I would re-impress that This journey to get to 15% compounded annual rate growth requires that we maintain a predictable, consistent business environment. So we can't be toying around with our policy and our support because we need all the help we can get to that number. Here's a data point based on research done by Everest with BPAP and O2P, which actually shows the cost Philippines and India without the currency impact yet. And really what it is saying is that the incentives that our industry gets allows us to really just stay within competitive range of the cost of doing business in our space with India. So cost, as we know, is not everything, but we need some reasonable costs to continue to be attractive. And that's why we need to continue to have incentives for our industry to remain competitive. Now you add the recent dynamics on currency flux, then all the more we actually need to maintain all of those fiscal incentives. Legislation was a topic that was asked in our survey. There's these answers about labor laws that are more attuned to the BPO industry. There's a high mention of also the Department of ICT, as mentioned by Senator Angara. 2 out of the 3 bills that he authored got passed. He's still rooting for the Department of ICT creation. All right, so to summarize, here's the opportunity for us. $14.7 billion in another 4 years if we're able to still capitalize on the trends and if we're able to mitigate all of these headwinds that is in front of us. It's never easy, but we've been doing this now for over 10 years and we're incredibly excited in actually facing the challenges of the future. Next question for us is, for over a year now, everybody is talking about how the Philippines has become number 1. And that certainly was exciting when we got to that point. The question is, where do we go from number 1, right? What do we do now that we're number 1? In yesterday's mid-year economic briefing, the venerable Washington CCIP raised his hand to ask the question of the economic panel. And it's interesting the way he would ask the question because he would start with, I've been in Philippine business for 65 years, right? So I think nobody in the room can top that. And he said, after World War II, and I don't know if anybody in the room would remember, we were number 2 as a country and multiple industries, only to Japan in terms of growth. We were ahead. And his question to the economic panel was, why are we now so behind everybody else, right? Which is always a frequent question asked in these dialogue. And I think that's the reason we need to pause and looking 10 years out, because as day to day, we worry about tomorrow's recruiting target, trying to keep attrition to a low level, managing our costs, managing our client, performing for our clients. We need to start thinking 10 years out, how's the game gonna change? And are we ready for that game change? Because it is gonna change. And I don't want our industry to be part of what the Washington City would say, once upon a time, we are the market leader in contact center, now we're behind. It all shifted somewhere else. And that's why today's session with our many guests from here and abroad, I'm very excited to listen to their thoughts because we need to start thinking and get future ready. Continue to be a market leader 10 years out for our industry. Thank you very much.